Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that analysts from JPMorgan think could surge over 70%. So let's get into it. Alright guys, welcome back and thank you so much for being here. Today we're looking at two picks from JPMorgan analysts that they think have some pretty attractive upside potential. We're going to take a look at what these companies do and how the other analysts weigh in as well. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel so you can stay up to date with all of our latest videos. Okay, let's jump right into these two growth stocks, starting off with Camping World. Trading under the ticker CWH, they're currently priced at $37.19 per share. And as the name suggests, Camping World deals in outdoor and camping gear, as well as RV sales and maintenance and repair. With over 160 Camping World and Gander RV and outdoor supercenters nationwide, a full-service call center and comprehensive website featuring thousands of quality products for RVs, camping, towing, and outdoor living, Camping World and Gander RV is the premier one-stop shop for everything RV. They also offer exclusive benefits and discounts to members of the Good Sam Club, the world's largest RV membership organization with 2.1 million members. Camping World is the leader in their niche, holding the largest market share. They're the #1 RV park network, #1 RV retailer in America, #1 in plans and services, and the #1 RV membership community. Along with their RV and retail products, their Good Sam memberships offers customers different services like roadside assistance and trip planners, as well as campground booking and tech-enabled features. Camping World's long-term goal is to become an industry disruptor. They're focused on building a vertically integrated end-to-end experience for their adventurers, a virtual shopping experience, and monetizing data via artificial intelligence and machine learning. They also want to include blockchain and electrification of their platforms. Camping World shows a regular pattern when it comes to their quarterly revenues, seeing a seasonal decline in Q4 and Q1, followed by gains in Q2 and Q3. The most recent report for Q2 2021 showed a company record $2.06 billion at the top line, up 28% year over year. This was along with earnings per share of $2.33. These earnings compared favorably to the $1.53 reported in the year-ago quarter. These strong quarterly results led to the company announcing an increase in both their dividend and share repurchases. Early in August, the company announced that it was increasing its repurchase program by $125 million, and at the end of the month they declared a dividend raise from 25 cents per share up to 50 cents. The doubled dividend annualizes to $2 per common share and a healthy 5% dividend yield. Weighing in on the Camping World stock is JPMorgan analyst Ryan Brinkman. He said, with margin only climbing higher since the record reached in Q2 last year, even if margin were to fall from these levels, it is clearly now falling from a higher than previously anticipated level, and with the likeliest catalyst for lower margin being improving supply, suggesting higher volume could prove an important offset, cushioning overall profit dollars from the impact of normalizing margin. Ryan is one of 4 analysts with a current rating on the Camping World stock, and it does come in as a strong buy based on unanimous buy ratings. Their average price target comes in at $54.50, which would be an upside potential of 46.5% for this next year. On the low end, we do have a $47 price target, which would still be an upside of 26%. And on the high end, we have the JPMorgan price target of $65, which would be a 74.5% upside potential. Now, the second stock on our list is an interesting one, and it has a huge upside potential, but its stock has also been beaten down lately as they've battled a short seller report, and we're going to cover all of this. So the company we're taking a look at is Berkeley Lights. Trading under the ticker BLI, they're currently priced at $25.15 per share. Berkeley Lights is a biotech company. They're developing and using microdroplet optofluidic technology to locate and culture individual cells for biomedical research. The company's tech and services promise a revolution in the way that researchers study cells by providing faster, more accurate isolation, assay, and culture of single cells. Using these OEP fluidics, each cell or clone is imaged and monitored in real time in a nanopen chamber on their OptoSelect chips to provide rich visual data early and often. Their full platform and software suite deliver cell processing and deep profiling with more information about cell function than any other technology. Their flagship product is the Beacon Optofluidic System. This can replace a room full of equipment with this one system and work with individual cells radically faster than using other technologies. It automates and scales workflows far beyond manual, time-intensive analysis. They also have their Lightning Optofluidic System, which can select and clone single cells in just one day and characterize function in less than 1 week. Now, as I mentioned, their stock has taken a hit recently as they've been battling a scathing report from short seller Scorpion Capital. The report claimed that they had heard from a trail of customers that said they were tricked, misled, or overpromised into buying Berkeley Lights' Beacon platform for $2 million. Berkeley Lights responded saying that the claims were very incorrect, stating that the report from Scorpion, a self-proclaimed short seller, contains highly misleading statements, groundless claims, and a clear lack of industry understanding. It's important to note that they never reached out to Berkeley prior to the publication of the report, and they believe the sole purpose of the report was to serve the short seller's interest at the expense of Berkeley Lights shareholders. Several analysts have since weighed in on the stock following this short seller report, showing that they're really not bothered by these claims. One analyst at JPMorgan reiterated their price target, saying that the drastic stock reaction to the short seller's report is way overdone and creates an attractive buying opportunity. They wrote that we see little merit in most of the accusations made in the report, and we believe the underlying value proposition of BLI's Beacon platform stays intact. In fact, BLI had customers on site yesterday who expressed no concern in reaction to the Scorpion report. Also weighing in was Daniel Arias, who defended the company, saying that its portfolio of biology products are highly transformational. The biggest criticism that has been leveled against BLI is aimed at performance of the Beacon platform, which was more or less called a useless device. Our calls with customers yielded the opposite view. It is also worth noting that Kathy Wood's ARK Invest is a regular buyer of the Berkeley Lights stock. Her ARK Genomic Revolution ETF holds almost 4 million shares of the Berkeley Lights stock for a market value of about $100 million. Now, taking a quick look at their second quarter earnings report, which was shared at the beginning of August, they grew their total revenue to $19.3 million, which represented an 82% year-over-year growth, and brought the first half revenue to $37.9 million, which was a 56% increase over the first half of 2020. They also expanded the installed base to 92 platforms, with 7 new direct placements shipped in the quarter. The Berkeley Lights stock does currently have 6 analyst ratings, and it does come in as a moderate buy based on 4 buy ratings, 2 holds, and no sells. The average price target comes in at $73 per share. That would be an upside of 190%. Looking at our most recent ratings from the last 6 days following the short seller report, they're still faring very optimistic. We have a low-end price target of $65, which would still be an upside of 157%. And from JPMorgan, a $100 price target. That would be an upside of 296%. So there are 2 stocks that JPMorgan analysts think have some huge growth ahead. Now, you guys know I always love hearing from you, so please leave your comments down below on what you think of these 2 companies. I'm especially intrigued about Berkeley Lights. There's a lot of interesting situations with some of these short seller reports, and I'm curious if these have you scared off or if you see it as a great buying opportunity. So let me know what you think. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes, so please make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. I hope you have a fantastic day, and I will see you back here next time.